my my general theory behind this is if you don't have much savings and you're young, put all of your savings into this. And I know that sounds obscene, but this is the only way. So put as much as you can in. If you're building a business, yeah, invest in yourself too. Okay, great. So anybody under the age of 30, just go for it.
Raoul Paul dives deep into why crypto might save us from a financial collapse, exploring Bitcoin's millionaire potential and whether Visa or MasterCard could stop it. Let's find out what he really thinks. Watch now.
It's one of the things that really pisses me off is there is a massive online TikTok and probably Instagram trend, which is passive income. It's like this, we all want passive income. There's no such thing as passive income. I've owned many properties in my life. I've had rental properties and houses I live in. They are all a sucking of costs and time. There's always something breaking. There's always something wrong. Your tenants leave. They leave you on the lurch. They've trashed the place. You've got to redecorate it. You're not getting rent. Before you know it, you've got the mortgage payments to make. And how much money do you really... Can you beat the 145% a year? Or the 100% a year? Or the 50% a year? No. So here we've got this digital property. There's only 21 million, so it's scarce. Why would you bother? You can make one investment and go to the beach and do nothing. Versus, I need to go and borrow money from the bank, hope the economic system keeps me afloat, hope I keep my job so I can pay the mortgage payments, hope the other one on the first property, I hope the other one, the payments the tenants can keep in their job, I hope, okay, great. Maybe you think you've sorted it out. Next thing that happens is everyone starts working from home and not the office. So they're leaving the city and you've suddenly got 5 apartments in a city and nobody wants to go to the city. Now what do? You can't sell them either. So you don't know. So the people who all bought office real estate, they're like, obviously companies, I just rented to them. They're brilliant. They always pay the bill. Well, everyone's working from home. Fucking real estate's empty everywhere. You still run a lot of risk, but you don't get the returns you can from investing in crypto or even investing in technology stocks. And I like the idea of crypto and technology stocks, even as holding the two and then focusing the rest of the time, just keep focusing on your income, grow your income, build your business, do what you can, because you're investing past that 2030 date. You're investing in your own demise. The acceleration of technology means technology stocks go up. The more they have to debase the currency to pay the debt for the baby boomers, the more your crypto goes up. The more that AI needs crypto to pay itself for the compute and the energy, the more your crypto goes up. Okay, so now you've got a system really working for your own disruption. So it's a hedge against your life. And then you can just focus, as opposed to finding real estate, buying real estate, doing it out, renting it out, all of the hassle. You can now focus on your job or finding another job or finding something you love that can generate more income. And then you can invest more of that income. And before you know it, you're enjoying yourself, doing something you find interesting, and the numbers are working for you. But people aren't told this on, the whole TikTok passive income trend is just bullshit. It's a very, very hard way to make a living.
Robert Kiyosaki, the famous author of Rich Dad, Poor Dad, has once again sparked debate by declaring the end of the US dollar. Known for his bold financial predictions, Kiyosaki isn't just relying on gold, silver, or Bitcoin this time, he's doubling down on Ethereum too. His latest post on X read, "End of US dollar? Adding to my gold, silver, Bitcoin, and Ethereum stack," warning that those who continue saving in dollars are losers. Kiyosaki's remarks come at a time when the dollar's value has been under intense scrutiny, with inflation and government overspending raising alarms. He recently joked that drunk sailors spend their own money, calling out political irresponsibility while hinting that real wealth lies outside traditional finance. Now he's highlighting Ethereum's growing importance, aligning with analysts who believe it's becoming the backbone of decentralized finance. With massive inflows into Ethereum ETFs, over $1.3 billion in a week, Kiyosaki's message is clear. The financial shift has already begun.
just don't screw up by buying stupid meme tokens and expect it to 1,000x. Sure, you can play around with 10% of your money. Just keep it in like Bitcoin, Ethereum, Solana, Sui, these kind of big networks, and just let it compound, let it do its thing. Don't trade it, don't do anything. Just keep buying over time. It's called dollar cost average. Every month add a bit more in. And then you can play around with some other stuff because it's fun, and that's okay. You can invest in yourself, and if you then start generating more cash flow, then you put more money in. Okay, that's a decent idea. So the game becomes, how much can you grow your wages? Can you trade up your job? Can you do a second job to invest as much as possible? As you get older, and we're seeing this now with the millennials, they're all kind of in their mid to late 30s. Okay, they've now got, the big problem is they need to buy a house, they're getting married, and they're having kids. And they realize they just don't have the savings for it. So there's a sense of urgency in that group of people. Is like, fuck, we've really got to sort ourselves out. And so they are trying to figure this out. So, we saw them start discovering financial markets in a big way from COVID onwards as they're trying to figure this out.
Ethereum might be gearing up for a major breakout, and analysts are calling its latest move spooky. The world's second largest cryptocurrency is now moving almost perfectly in sync with the Russell 2000 index, which tracks small-cap U.S. stocks. Both assets are extremely sensitive to interest rates, and with up to 4 Federal Reserve rate cuts expected soon, experts believe they could rise together. Analysts from Milk Road Macro pointed out that Ethereum and the Russell 2000 even share a bullish cup and handle chart pattern, a classic signal that often precedes strong rallies. Market sentiment is turning optimistic, with CME futures showing a nearly 96% chance of another rate cut by the end of October, and more to follow by December. Justin Danathan of Arctic Digital noted that unlike Bitcoin, Ether generates yield, which could make it even more appealing as rates drop. Meanwhile, chart analysts like Matt Hughes say Ethereum is holding steady above $4,350, suggesting new all-time highs may be within reach. Some even predict Ether could surge past 5,000 or beyond as capital rotates back into high-growth assets. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time.